Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, the relevance and policy impact. I'm Govind Rajathiraj. The Reserve Bank of India did not cut interest rates in its latest monetary policy review this week, as many expected, leaving them untouched. The reasoning given was demonetization and the need to assess how the transitory effects of demonetization on inflation and the output gap play out. The Reserve Bank also changed its stance from accommodative to neutral, another move that surprised markets, including the bond markets, which fell. So what can we take away from the observations of the credit policy, and what does this mean to you, the saver and the loan borrower? To discuss this, I'm joined by Dr. Brinda Jagidar, economist, and also Shubhajit Rakshit, economist at Kotak Institutional Securities. Thank you both for joining me. Brinda, let me begin with you. So it was expected that the Reserve Bank would cut rates somewhat, and that too coming on the heels of a budget which somewhat pointed in that direction again. So it did not.
Absolutely, you're right, absolutely. Because not just the budget, the CPI inflation is at a 2-year low. The fiscal deficit gave it, the control of the fiscal deficit also gave it a lot of space, and growth needed a push. So looking at the whole environment, it did. I mean, I was also in the camp which said that there would be at least a 25 basis point cut. But I think there was another viewpoint which Reserve Bank brought out very clearly. One, of course, is demonetization and its impact, as you rightly mentioned just now, which they are yet to assess. The second one, which I think is more crucial, is that the Reserve Bank is a little worried about inflation still. It is worried about global inflation feeding into domestic inflation. Global inflation from higher crude oil prices and global inflation from a stronger dollar. And at the same time, domestic inflation, given the 7th Pay Commission payouts. So I think it was the Reserve Bank was more worried about inflation, because if you look at inflation also, the number that they have put out is for March 17 is less than 5%. But for FY 18, they said it's going to be above 5%, and the Monetary Policy Committee has kicked in. I mean, the agreement has just kicked in. It has to be about the inflation rate to be kept below 6%.
Right. Okay. Let me get Shubhajit here. Shubhajit, so the other thing the Reserve Bank said was that it was shifting its stance from accommodative to neutral. Now, this has spooked markets, particularly bond markets. Tell us what this means and why.
See, I think obviously the bigger surprise in terms of whether it's a rate cut or not, I think that is kind of debatable. But the biggest surprise was the change in stance, which you correctly pointed out. And when you say a change of stance to neutral, it usually means that I am, as a Reserve Bank, favorable towards either a hike or a cut, or just stay on a pause. So basically, in some sense, I'm not taking a call right now what outlook I want to project. And hence I will take a call once I have more clarity. Now, this at some level works in the sense that if you're looking at inflation which is kind of rising, or you're uncertain about how the global environment pans out, but at the same time you have to see what kind of inflation trajectory realistically can actually come about. I think the RBI is kind of on the higher side in terms of inflation expectations, inflation trajectory that it has put out. And it will be interesting to see actually how the neutral stance pans out once the inflation prints are much lower than what, if the inflation prints are much lower than what the RBI has put out in its inflation as its inflation estimates.
Your own sense of how inflation could go, since that's the basis of this. Inflation would mean prices will rise. What kind of prices do you think potentially could rise, which could be causing RBI concern?
See, I think prices in general is what the concern is. And more so on the core inflation. Core inflation includes, except food and fuel, all the other components. So if I look at the CPI basket, it is mostly services related kind of inflation that is being talked about. This is not, to be more precise, this is not the WPI inflation where most of the manufactured goods come in, and hence a higher component of imported inflation is factored in. This is the CPI inflation, where a lot depends on the domestic demand supply of goods and services. From that standpoint, with if you are factoring in a global kind of environment, volatility, etc., the pass-through generally is much lower than the WPI, and hence when we are talking about the prices, it is mostly domestic related demand supply driven prices that we are talking about.
So let's talk about demonetization. So the Reserve Bank has clearly observed that demonetization is something that they're going to watch for, or the transitory effects. What are these transitory effects, and why is this concern still there, and how does demonetization, or will demonetization likely affect interest rates?
Before I say that, let me say inflation. Reserve Bank says that the impact that we are seeing now on CPI is actually transitory, because if you exclude fruits and vegetables, CPI inflation is actually 4.8%. Now the impact of demonetization is still being assessed. Mostly it would be in the short term. I think by Q4 we would see the impact all
Which
sorted
is March
out.
31st in the end of the year.
Yes.
Financially.
Yes. But more than that, I think RBI is worried about banks, because the rates have been cut by about 175 basis points. RBI has cut it over the last
January 2015.
Yes, but the actual pass-through is only about 50%. So banks still have a scope for cutting their rates further, but actually the high inflation, high NPAs and recapitalization prevent banks from really passing on these rates further down.
But what's that got to do with demonetization?
No, it's not. It's the Reserve Bank says that even if I cut rates now, the transmission channel is still not very clean. It's still choked up. So banks will not be in a position to pass them on. Now, with demonetization, what has happened is banks have a lot of liquidity and a lot of funds have flown into the banking sector. So that is what has helped banks to cut down the rates. So that is immediate, transitory.
Right.
But going forward, until the NPA system is cleaned up, until the banks get recapitalized, they will not be in a position to really cut rates further. So that's what RBI is concerned.
Right. So Shubhajit, what's your outlook? So I mean, you touched upon the global aspect. You know, on this show we've been talking about it for the last many weeks now, that it's 2017 calendar is really going to be about global more than to some extent domestic. If you were to look at these observations by the Reserve Bank and the global factors at play, what does it add up to?
See, I think the global factors are have been very well outlined from, say, November last year, November 2016. So I don't think there is any surprise as such coming in as of now. We already know the themes that are likely to play out in 2017 in terms of the global. So higher DM yields or dollar strengthening, these are the common themes that are likely to be there. Commodity cycle, in terms of prices, have already been increasing, and I think that is fairly much, baked into most of the expectations. It's to come back to the the RBI stance. I think going forward, a lot of the thought process will revolve around how the inflation trajectory pans out, and to that extent, I think there might be some downward surprise, as in the RBI might be surprised on the downside when the inflation prints are gradually, every month we get the prints. More so, I think the second half might be lower than what the RBI is actually looking at in terms of 4.5% to 5%. And I think there might be some scope where the RBI might look at how how it reevaluates its stance or its outlook. So I think for the first 6 months or the next 6 months, possibly the RBI is going to stay put, not move much, wait and watch, and second half probably take a call that, okay, on a more durable basis, is inflation coming down and closer to the 4% that it's talking about.
Right. So, Brinda, we also went into this monetary policy review on the back of lower GDP numbers, and everyone now agrees that GDP numbers or growth numbers will be lower because of demonetization, and they were trending lower even before demonetization. So, what needs to be done then? I mean, on that accord or that count?
Look at the inflation GDP ratio that has been coming down consistently. So we need to get investment back on track, and we need to get that started in a big way and quickly. This can be led by the government, because private sector still is highly over leveraged, and private sector has a lot of excess capacity still. So the initiative for investment has to come from the government.
Which
and
the budget also talks about.
Already happening.
Yeah.
It's already happening, and this will take some time. So I think as we move on, as we go into the next year, we will see investment coming in, and we will see that driving the economy. So GDP growth will come back on track. Maybe not the 8% growth which we were looking at. That is still a little while away. But certainly look at the data the RBI itself has put out. So 6.9% for this year, 7.4% for the next year. So it's trending upwards, and I think it will move up in a gradual manner. So what is really important is, of course, getting inflation under control and getting growth back. So once we see that inflation is really, the transitory effects are all over, globally also there's some certainty, because deglobalization has created a lot of uncertainties, then I think the RBI, I would agree with Shubhajit, that in the second half maybe RBI would use this ammunition.
Right. So Shubhajit, do you think the RBI has turned out to be more hawkish than we thought or we gave it credit for?
Oh, absolutely. I think the change in stance was the game changer in some sense, for if you look at the bond markets. And I think we were surprised on, at least on the change in stance. We can debate whether a rate cut was there or not, but a change in stance certainly was not there on the cards.
If you look ahead, I mean, we talked about, GDP, the GDP targets, the fact that things are slipping. What's your sense on what needs to be done or what could be done to bring some growth momentum back into the economy?
So I think what Brinda talked about in terms of the investment cycle, I think that is the crucial part. We can talk about stimulus-led consumption growth and all, but at the end of the day, if you're not getting investment cycle back on track and specifically the private sector participation in it, it will be very difficult for a sustainable or durable uptick in growth. So solving the corporate balance sheet and bank balance sheet problem is the primary agenda. Along with that, if a consumption growth comes in, which obviously will improve the capacity utilization levels, that will obviously help in the investment cycle also. But first and foremost, I think all focus should be on the investment cycle, specifically the private sector part of it.
Well, we need to go in for a break now. Coming up on the other side of Policy Watch, should cash be disincentivized and cashless be incentivized? To discuss that, I'm joined by Ashish Ahuja of Fino PayTech and Anish Chakravarti, lead economist at Deloitte. Welcome back to Policy Watch. The government has been strongly advocating using less cash in business and personal transactions and using more digital or cashless methods. Despite the many incentives, there was a 10% fall in digital transactions in volume terms and 7% fall in value terms in the second month after demonetization was announced on November 8, 2016. Now, the data includes digital wallets, mobile banking, transactions, and electronic fund transfers. Now, there are several suggestions on how to incentivize the use of cashless, particularly amongst the poorer sections of society, as well as payments involving the government, both centre and state. But the success of cashless will also mean that someone has to bear the cost of the electronic transaction, something consumers across the board do not quite appreciate. So going forward, how can India incentivize cashless and make it a win-win? Well, to discuss this, I'm joined by Ashish Ahuja, Executive VP and Product Head at payments company Fino PayTech, and Anish Chakravarti, Lead Economist and Partner at consulting firm Deloitte. Thank you both for joining me. Anish, let me begin with you. If you were to look back in the last couple of months, from a macro point of view, how has the experiment with cashless been?
Well, it's always been there, the experiment with cashless. It's just, it never had that visibility. We're suddenly seeing that visibility. There are some data points which are very stark to me. You rightly mentioned it has come down, but if you look at November to December, and I'll use two data points, one is USSD. Transactions there just in 1 month went up from 7,000 to 95,300. That's the number of transactions. If you look at Unified Payments Interface, the numbers went up from roughly about 70 crores to about 690 crores. Huge jump, close to about 700, 800%.
Right.
Since then, January, it's slightly tapered off because you can't sustain that level. So I think the visibility suddenly went up. It was an explosion of visibility. It's sort of tapering off, but the question is, where does it consolidate and what level it stops? I don't think the experiment has stopped. It will continue. It's really when does and how does the consolidation happen?
Right. So, Ashish, if you were to look at your own experience as a business correspondent, as someone who's been setting up payment system chains or links, what's your sense in terms of how people behave when it comes to digital and cashless and the learnings from the last 2 months?
So, Govind, if I was to look at it, I would say that, the fact that the cash was sucked out of the economy definitely gave a big fillip to the cashless part of it. The digital economy took off. Question is, how well will it sustain over a period of time? If I look at my own data in terms of being a large BC, one of the largest BCs in the country, I would look at it and see that we've got broadly about a 50% jump in the digital transaction, RuPay cards, AEPS, financial inclusion. And this is largely a rural economy that I'm talking of, right? Question is, now that the cash starts coming back into the economy, to what point will this peter off, and what will be that stabilizing point from where we can take off again? I don't think it's going to be a question of everything coming back to status quo as and when the cash comes back. I think people have got used to the fact that digital economy is the way of life. There are going to be some incentives that are going to be put in place. There are large measures being taken by the government. There are private players. There are 20 banks, about 20 banks which are going to be coming in soon. So I think this is going to be a way of life, and the experiments, I would say, would continue to go down that path to make sure that digital is a way of life now.
If it's going to become a way of life, Anish, so how do you think this should be approached? And are there lessons from other countries where governments have, or rather, how have they handled it?
So right. So again, I'll go back to statistics because that always interests in these scenarios. So this is a kind of a transformation as we've seen taking place. So if you look at cash transactions, we know that 98% of transactions, consumer transactions, are cash. Less than 2% is really. And India is in line with countries such as Kenya. Even Mexico and Brazil are ahead of us. And right on top, we have countries such as Netherlands and Singapore, where it's over 50%. But that took a while to achieve, right? And that's a transformation over a couple of decades. It's over 10, 20 years. So it's not that overnight India will turn cashless. The second aspect, I think, which is very interesting on this perspective is digital literacy. So while all this infrastructure is being created, I don't think there's much conversation happening around literacy because it is not the urban consumer that we are talking about. It's really the penetration to the second tier cities, third tier cities, even to the rural areas, on saying that, well, a lot of your traditional way of doing business has been cash, small trading commodities transactions, for example. If you need to change that, you need to be digitally literate to do that. The good thing is smartphone penetration has been very high, over 300, 400 million, and SIM penetration has been very high, over 1 billion. So it is a start, but it will take, in my mind, a considerable amount of time to achieve.
Right. So, and the other important factor, or the most important factor perhaps, is the cost, right? So, Ashish, let me put this question to you. So, someone has to bear the cost at all times. Now, obviously, if you are setting up the payment system or the payment link or the gateway, you have to be compensated for it. If someone else is doing it, they have to be compensated by government. And the payment provider, the system provider, doesn't really care whether it's the government who's the beneficiary or the consumer. So, how is this going to work in your mind as we go along?
So I think, there are going to be a couple of enablers. One is, if you look at it today, we broadly have about 1.5 million POS devices in the country. And the target is, broadly to double it up in the next couple of months, or probably in about 6 months from now. Question is, till today, I don't think world over, it is the consumer doesn't pay. Typically, it is either it's the merchant who's been used to paying for the transaction. And India has been typically on the same path. Question is, can we lower the transaction cost to the merchant so as to enable a digital environment in the localized thing? And I would agree, it's the tier 2, tier 3, tier 4 cities and towns which really need to be enabled if this has to be sustained and this has to grow. And hence the enabler needs to be in the fact that to lower the cost of transaction. You've already got lowering of cost on transaction on debit cards, which the government is pushing, and there has been some lowering of cost there. There's been waiver of duties. So these kind of measures are the ones that are going to help in lowering the cost of transaction. More and more people coming in will increase the viability of that merchant being pulled into the formal system, because unless you have the entire environment digitized, you're going to just find that one side of the transaction, which is receiving your salaries in a digitized mode in your bank account, is not going to be enough. If you don't have the spend opportunities digitally, which is convenient and economical, it's not going to sustain the growth that we are seeing at this point of time.
When we talk about digital literacy, Anish, is literacy for whom? Is it the person who's actually executing the transaction? Is it the government itself trying to spread a larger message? How does the person realize that there is a benefit, and there is a benefit despite the cost that one has to bear?
So it's all across. So one is, of course, the government. Right now, the owners of the infrastructure really rise on the government. So let me again take an example. USSD, Unstructured Supplementary Service Data. Now, this has been in existence.
Where you can make a payment on a normal phone, even if it's not a
type a code
smartphone,
and you make a payment, right? How many people really know how to do that? Okay, how many people really know what the benefit of that is? And I'm talking about urban consumers here, it's not even the rural consumer. So spread of that information, I think, is extremely important. I think the National Payments Council, even the creation of the BHIM app, for example, is extremely, it's a good thing. But the question is, how many people have really downloaded the BHIM app? And if you look at some of the numbers, given the kind of SIM penetration we've had, those numbers are minuscule from that perspective. So again, it's a fantastic start, but someone needs to sustain that start going forward. And a lot of sustenance of that, to me, comes from the literacy aspect, which is training the consumer how to do it, training the consumer on the benefit, that you're going cashless from that perspective, it is to your benefit.
And why is it to my benefit?
Well, first of all, a lot of cash, typically the reason why we see that cashless transactions elsewhere in the world succeeding, okay? One is, of course, that part of the benefit is you don't have to carry that cash around. Secondly, from the government's perspective, that whole parallel economy question comes down.
Right. So the government's perspective is pretty clear. I'm saying, why should I, as an individual, I know this is a question that's been asked many, many times in the last few months.
I think as an individual also, there's a tremendous benefit in using this. And that's notwithstanding the fact that you don't have to carry bulky cash around. There's a tremendous amount of ease of doing a digital transaction, provided you do it correctly, right? Secondly, the record maintenance of transaction like that is much easier. But then again, Govind, I'm talking about the urban consumer, people like us. But really in the rural area, to change something which they've been used to, where cash is king, I think that transformation itself, that benefit is wholly different set of challenges.
Right. So Ashish, what your experience here, and what are the factors that are driving this change, if at all, particularly rural India?
So I would say that, currently, the current drive is more in terms of the fact because of the non-availability of cash, right? So let me give you a few examples. Like if I look at an international remittance example, right? Because of paucity of cash, the merchants who were dispensing out on behalf of the principal agents did not have cash available with them. People came up with innovative products like putting it onto a prepaid instrument or putting it into your bank. Question is, how long will this sustain? The experience is, if the digital push has to continue, I would agree. The financial literacy part of it, the benefits typically need to be understood widely by the consumer and the merchant. And I would, again go back to stress that the merchant is the more important play in this, because that is where the play of the economy comes in. That's where the spend side comes out. If that avenue is built up in a larger measure, you would find that people would take on to the convenience, the security aspect of it, plus the fact that whenever they're moving around, it's a simple plastic or a thumbprint. You can have APS, you have UPI, you have plastic. So any form which does not require you to carry cash with you will only take off if all these measures put together come in, in equal force.
If you were to look ahead, Anis, how do you see, assuming, let's say, cashless becomes more successful, what do you see changing in the way the economy moves forward, or, does it get more lubricated as, some would hope, or could it actually go the other way around?
Okay, I think, the cash to GDP ratio in this country is about 12-13%, right? Even to make 100 basis point change there is a marked change overall, just given the quantum that we are talking about. To me, as I said, advanced countries, we've seen this, this entire experiment, if you call it, span over 10 to 20 years. So I think India is no exception. India will take time. And India is not a Netherlands or a Singapore from a population perspective.
Right,
it's a much larger economy. So it will take time. The question is, this is a start. However minuscule it is a start. I think a couple of things are going to happen. I don't think we will ever achieve cashless. Okay, that's a myth in my mind. It is less cash. But that less cash itself is also a much smaller quantum that we are talking about. Therefore, again, I'll go back to the point that it comes to the fact that if you're penetrating with the infrastructure on one side, which the government is doing, the BMAP, everything that we're looking at, if you're also experimenting with the kind of mobile wallets, there's a flurry of mobile wallet companies which have opened up, right? All of this needs to consolidate and sustain. It is like the e-commerce rush we saw in the late 90s. That will play out over the next 1 to 2 years. And after that, the scenario which will emerge will be very different from what we're seeing now, which is really at a very nascent sunrise stage. At that time, it will go on. One point, though, which I firmly believe in, that from a macroeconomic perspective, gone are the days about 2 to 3 years back when people would just be unaware of it. Even the RuPay card started in 2012. Not many people knew about it. But if you look at the numbers now, again, in the last 2 to 3 months, because of the Jan Dhan Yojana, and the granting of the...
So you're saying knowledge is accelerating?
There's a huge exponential growth which is happening, both on the knowledge front and the usage front. But for a scale of an economy like India, it'll take a while to catch up.
Right. But on the other hand, you're saying that we should not also equally think that, we should not strive for a cashless utopian society or a utopian society which is cashless.
Absolutely.
It's just less cash is a good enough target to hope for. We've run out of time. Thank you, Anis, and thank you, Ashish, for joining us. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.